Good morning, everybody. Today is the sixth day in the month of April 2022. My name is Heritage Adisa, market analyst at Hot Forex. Quickly, as usual, we'll check through the markets, find out what the overall sentiment is in the markets, if there are big stories, what the major drivers are, how they affect currencies, and if we can take advantage of these opportunities if they are available. But please don't forget that this is just a communication material and nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall environment is another mixed, start to the day. This has been flowing for most of the week. It was there on Monday. Yes, light risk on, but overly nothing much there. Yesterday, same story. Today we have a same story. And we had said this already on Monday that it was going to be a week where you just had to take a step at a time. Could be a very slow one in terms of the data side, and then we could just have really, really overly messy price action generally, in the week, and that's what we're having today. But particularly, yesterday we had hawkish comments from one of the Federal Reserve members. Fed Brainerd. She's also a dove. A dove means that she's usually, more inclined towards, leaving policies, losing policies generally. But she had comment. She was on the wire yesterday, and she said she expects US policies to be at average levels, at neutral levels, even this year. That means that at the back of fast rate hikes, at the back of rapid balance sheets also run off, like reducing that as well, and then more tightening to also follow. Now that's pretty hawkish for a dove. And usually when you have um speeches from doves, more hawkish, or hawkish speeches from doves, or more dovish speeches from hawks, usually gathers more reaction. And this has seen, strength in the USD, so push strength in bond yields as well, and pressured equities into the close yesterday. And with yields up, clearly you expect Japanese yen to also be weakened, right? Despite the attempt from Kuroda to also try and jump on the currency yesterday. So there's also that to pay attention to. In China, there's been a spike in COVID cases. It's continued. In Shanghai, they're at record levels right now. And then the city is on full lockdown with everybody said to be tested. Now, obviously, that's not good. That weighs on oil prices generally because of lockdowns, low restrictions, low movement, low demand, and even Chinese equities are also down as well. The hawkish RBA we had yesterday has still kept the Australian dollar supported, despite the fact that we have, some worrying situations in China. So there's also that to pay attention to. Apart from that, today, for example, we're expecting US and UK to impose additional sanctions on Russia, with Europe already planning or preparing their own version of the sanctions as well. Clearly, all of that doesn't bode well for the euro. So euro is pressured as well in today's, session. And then overly, the sentiment is mostly tentative, right? At best, you have equities not really doing so much. You have them pushing up, pushing down, on the Asian side, for example, we have equities moving choppy. European equities and US equities are mostly flat, right, for the day as well. So despite that, or that's mostly the case for sentiment. Yeah, you say AUD and NZD are leading the majors. Yes, CHFGP are lagging, right, which normally would want to point to a more positive environment, but the equity space is not really helping with that. And with so much worries that we've lined up so far, there's not so much convictions in terms of the space that we have currently. Yeah, oil prices are down for the day. Um, Lockdowns continue in China, so that's one of the reasons for that. Although in today's session we've seen some bounce back from that, so there's also that to pay attention to. Still choppy on that front. The VIX is mostly flat today. The bond market continues to fall, continues its route as faster and tighter monetary policy from the US continues to be very, very key in our focus. So it's already down. The US 10-year bond is already down about 1.76% already this month. This is just the sixth day of the month, right? So clearly that gives you an idea of where that is. Means that yields are up, means that it also pushes strength into the US dollar as well. I also wrote here, I said, weakness in the Japanese yen and the euro generally, remains still back. They're backed, right? JPY is weak because of rising bond yields. Euro is weak because of the sanctions, basically. And AUD is also supported by the RBA, and then US is supported by the, hawkish Federal Reserve speech. But if you look at all these pairs, you can see pair strength versus weakness. They're mostly stretched technically, right? And because you have a mixed environment generally, light economic calendar, I mean, patience would be a virtue in a session like today's session. On the day ahead, not much going on. The FOMC meeting minutes later in the day ahead, but apart from that, not really much on the calendar. Looking across board, this is what I'm talking about. You look at equities, for example, on the Asian side, choppy moves down, up. On the Japanese side as well, down, up as well. The European equities down, up in today's session already. You look at the UK FTSE as well, similar story as well in today's session. I mean, this is messy, right? You look at the US side, right? In today's session, not much going on here. Across board, a very, very similar story, not much going on here, despite the route we had in yesterday's. So this just gives you a more clearer picture of what we have. I think sentiment generally is still, tilted towards the downside. I believe so. And then, but you look at how the currencies are trading right now. I mean, it's not really, really in sync, right? So much disjointed moves across board. And you look at oil prices, like I mentioned earlier, right? This one as well. Yesterday's session we had that flush lower, and today we're seeing some pullback. But with lockdowns, that's not really good for oil prices. If that continues or persists, you should see oil prices weaken even further. Even though there's also catalysts that could make oil prices even stronger with more sanctions here and there. And there was a few comments that yes, there wouldn't be sanctions on oil from Europe side, mostly on coal. But there was also another comment earlier as well where they're also considering oil as well. So all of that, up and down really just gives so much catalyst on the good side and the bad side for oil prices so far. And then that means as traders, you want to also be very, very watchful of this. The VIX remains mostly, not going anywhere into the session, but jumped off almost when we hit that 20 level of key level that we always like to pay attention to when we're looking at the VIX. But now elevated, fear elevated as well, even though we're still mostly trading flat for today's session. But fear clearly elevated from the levels we saw at the start of the week and into early yesterday's session. Now, looking across the FX space, like we mentioned, just a quick review of one of the trades that we had yesterday. I looked at this yesterday because yesterday we had talk of sanctions here on Europe, on Russia from Europe, and then that was obviously naturally a good thing for oil prices, supporting the card. We had weakness in a little bit of strength in Japanese yen at first, but just on the back of jawbone. But the reason why we had that strength was just very tiny, and I didn't expect it to last so long. And I've been monitoring this level for a while now, where I had this overhead trend line coming from just 29th of March, tested again on the 1st of April as well. And then we said, I already saw this breakout on Monday. So I was waiting for a pullback to that level before looking to jump in. And better for me, it also coincided with my 15 hourly moving average here as well. Also tested it one more time as well, also above the 100 moving average. And then I triggered a buy order from here. And then I wrote this to the highs, I just closed that early this morning to the highs around this level. You can see it was also very, very close to the highs going back to the 29th of March as well. So very clean one there, up over 100 pips on that one. Just thought to just show us that where we go. Now, generally, you look at the likes of Euro against AUD. If you want to look at this pair, for example, in terms of the strength and weakness we've seen so far, it's so stretched. I mean, you don't want to be caught selling at lows like this, right? The last time we had levels like this was way, way back in 2016 thereabouts. I mean, it doesn't really 2017 rather. So it doesn't really, build confidence in trying to sell at levels like this. As a matter of fact, we're really stalling at the low. So that's not really looking interesting for me. You look at AED as well. If you want to look at this as well in terms of strength, where we're trading currently, I mean, the highs, high of yesterday, the high of early Asian session, also the high going back to 28th of March as well. So if I really wanted to look at this, and maybe, even though confidence is not really high here, if we could clear out this level, maybe a retest of this to the upside, I would not mind, but I really don't expect, I'm not really confident in such a move like this, right? Even though, yes, we are above moving averages, but these overhead resistance levels make it a little bit tricky. If we can get, a clear breakout of this in retest, then I probably like that and I look for further pushes to the upside on that particular one. USD JPY, also an interesting one to look out for, but where we are currently, we're struggling at this overhead resistance. And this quick one, okay, overhead resistance, just look at it. Right. In even today's session, we failed to really break out of this level. You look back as well, that was also very close to the previous highs that we had going back to 29th of March. So it just makes it a little bit tricky. If we could get pullbacks, that would be better for looking for further upside, or we could get a clean breakout of this level, but we still have this one to also contend with. So that's also one to also be very careful about. But generally, the mood is still mixed. Yes, you have strength and weaknesses, catalysts behind them, but the moves are stretched, in terms of the technical side. So I think patience is really a better way to look going into the session. And you look at the calendar, we don't have much going on. Yes, a couple of central banks speak, but apart from that, it's still going to be until the FOMC meeting minutes before we have anything concrete. What are we looking for here? There's been more and more hawkish talk, more hawkish tilt from Federal Reserve members, and the main focus would there be a 50 basis point hike in the next central bank meeting? If that's the case, why not? That would be great. That would be good for the dollar. But we'd like to see the details of the minutes, right, in terms of what we have. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask, and we'll always do our best to help. Thank you. Do enjoy the rest of your trading session. Goodbye for now.